All right, let's talk about C3.ai. The company just released its latest earnings, and wow, the market's reaction was, well, it wasn't just bad, it was brutal. So, what on earth happened? We're going to break down what these numbers are really telling us about this big name in AI stocks.
Okay, before we dive in, just the quick but super important reminder. This is not financial advice. We're just breaking down the news. You should always do your own research before making any investment decisions.
So, just how bad was it? Let's start with the numbers because honestly, they really speak for themselves. Get this. In just one day, C3.ai stock plummeted by nearly 29%. A drop that steep doesn't just happen out of nowhere. It's a massive, flashing red light of investor panic, and it leads to one very simple question.
What was in that report that could possibly trigger such a dramatic sell off? Well, the answer really boils down to the huge gap between what the company promised and what it actually delivered.
And here's the smoking gun. The company missed its own revenue guidance by a jaw-dropping 33%. That's not just a miss. That's a huge shortfall. And it's the kind of thing that completely shatters investor confidence. To put a dollar figure on it, their revenue for the quarter was $70.3 million. Now, that sounds like a big number, right? But it was nowhere near what the company led the market to believe it would be. In the investing world, that's a cardinal sin. It's all about trust. So that covers the what. Now let's get into the why. Because this whole situation isn't just about one bad quarter. It's about this fundamental tension right at the heart of C3AI's entire story.
And this really gets to the core dilemma. On one hand, you've got the promise, right? C3AI is a known player in the enterprise AI space. They've got strong partnerships. But on the other hand, you have the reality. They're having execution problems, sales are slowing down, and the company is still losing money. It's that classic tug of war between potential and performance.
Now, if we look at it from a technical chart perspective, the picture is also pretty concerning. Think of a support level like a safety net for a stock price, where buyers usually step in and stop it from falling further. Well, C3.ai just tore right through its safety net. And the analysis suggests the next one isn't until you get all the way down to the $11 to $12 range. That could be another 33% drop from here. So, with the big revenue miss, the struggles with operations, and that technical breakdown we just talked about, what's the big takeaway for investors? Well, the guidance here is actually very, very clear. The key piece of advice is pretty blunt. Avoid adding at current levels. In other words, the analysis is screaming that this is a time for serious caution, not for trying to catch a falling knife. So this cautious view really translates into a two-part strategy. If you're someone who already holds the stock, the advice is to watch that $11 to $12 support zone really closely. That could be a more strategic place to think about adding. And if you're a new buyer looking to get in long term, the message is basically hold your horses. Wait for the dust to settle and for real signs of stability before you put any new money to work.
Okay, we have covered a ton of ground here. So let's just boil it all down to the absolute key things that you need to walk away with.
So to sum it all up, first, a huge revenue miss just hammered the stock. Second, the company is dealing with real operational issues and is still not profitable, which creates some serious short-term challenges. Third, all that amazing AI potential the company has is being totally overshadowed by these execution problems. Fourth, from a technical view, the stock broke a critical price floor. And finally, putting it all together, the expert advice is crystal clear. Be cautious. Wait and monitor. And this leaves us with the million-dollar question that every single investor is asking right now. Was this quarter just a temporary stumble for a really promising AI company, or is it a warning sign of much deeper, more fundamental trouble? The answer to that is going to define C3AI's entire future.
And that's all for this explainer. Hey, if you found this breakdown helpful, please do us a favor and hit that like button and subscribe. It really helps us make more explainers just like this one. Thanks so much for watching.